Welcome to Markets Now. I'm Michelle Rourke with Kent Beadle Paradigm Futures. We're mixed in both grain and livestock futures trade. We started off higher in the grains, but now we've got wheat setting back. Corn and soybeans are off of their highs for this session. Kent, thanks for joining us. Let's talk about wheat. We made new highs for the move here this morning in the wheat market, but we are backing off. So is that profit taking, farmer selling, and does it matter right now? Will we go back up at some point?
Well, I'm sure there are some recent longs and there could be some profit taking, but it's not generally the modus operandi of the funds
Right.
to sell new contract highs. So what I would think is happening here is we have reasonably good crop conditions here in the U.S. and with the markets opening into higher highs, I think we probably had some farmer hedging of this upcoming year's crop production because we've had some pretty, positive news about conditions, whether it was the crop tour in Kansas that was maybe a little higher than expected, and some recent tours of Illinois and the soft red crop that have been suggesting that crop might just blow the doors off.
Okay, so a couple of reasons there for maybe a pullback, but Paris Milling Wheat Futures also made some new highs here. We've kind of been following that market to some degree or to a
Yes.
big degree, and we're still concerned about these global production issues, right? So this weather story isn't over.
No, it's not over. And in fact, Paris Milling Wheat gapped into new contract highs after about a 5 or 6 day consolidation. So, very strong technical start to the day. They've come off their highs a little bit as well. But, we have dryness in the Black Sea. We've got excess moisture in parts of Europe. We've had the impacts of frosts in Russia, of course. There are some concerns about Australia and some dryness that has developed there in certain areas. So you've got a lot of stuff going on here. And while the U.S. crop might be a little bigger, it could well be that U.S. exports are going to go up as a result.
Yeah. So corn did not follow wheat higher yesterday. It looked like planting progress might have been part of the reason,
Yeah.
but we do have some heavy rains that fell in parts of at least the northwestern corn belt, causing some concern about planting delays. There is kind of a tug of war going on in that corn market right now.
Yeah, absolutely. Because what's happening is the eastern corn belt was forecast to have a fair amount of moisture here this week. And this Tuesday, Wednesday event that they were supposed to get, everything kind of shifted up to the north. And as the line of showers got into the eastern belt, not much came out of it. In fact, I've been hearing from clients that there was heavy wind and a lot of dust blowing around in the eastern belt yesterday. So we're going to continue to keep the window open at least till the weekend for parts of Illinois, Indiana, and Ohio. Meanwhile, in Minnesota, in Iowa, eastern Nebraska, some parts of the Dakotas, we had a lot of rainfall. We had tornadoes, of course. We had some flood watches and some reports of flooding, which may actually, prompt some replant requirements. And, quite frankly, we've got about 20% of the crop left to plant in Iowa and Minnesota and, in parts of the Dakotas. And that 20% is running up against insurance dates, which for Minnesota and Dakotas is the 25th of May. Given where prices are and the yield hit that you oftentimes take when you plant late and plant wet, we think that prevent plant is going to be an option on a lot of those acres as growers start to, contemplate that decision here later this week or into next week.
No doubt. So soybeans trying to hold on to gains here this morning. We have had some talk of, or I guess some rumors of some China business, old crop business off the PNW. So that kind of started us off a little stronger.
Yeah, I mean, go back to last week. There was a daily announcement of 180,000 tons, 2 cargoes of which were old crop going to an unknown destination. Oftentimes that's China. We have more rumors of that type of business taking place here Monday and Tuesday, although we did not get a confirmation from the USDA on the morning report of any of that trade. But, there were enough rumors from enough different sources that it's more than likely that some of that business took place. Supposedly it's for July, August shipment, which makes sense because that's when basis levels are high enough in Brazil to match up with U.S. offers to be able to, allow for a potentially cheaper U.S. soybean to hit that time frame. I do also think it's important to note that we haven't done that type of business the last few years, but there is a pretty strong reason for that, and that is that we've had very tight ending stocks in soybeans. Stocks to use have been in that 5, 6, 7% area, and we are going to have more supply of ending stock this year, so we actually have the physical ability to execute in July, August if the marketplace deems that those bushels are needed.
Yeah. And even though we had new highs for the move in the wheat market this morning, if you look at a chart, corn and soybeans are still in their trading ranges, aren't they?
Oh, yeah, very much so. And, we've got some fairly significant resistance in July corn at 475. Support is developed in the 451, 452 area. So, let's just call it a 25-cent trading range, and we're bouncing around in that range here for a little bit, and we may continue to do so. Same thing right now in July beans, $12 to $12.50. Looks to be a pretty solid range for the beans right now as well.
Yeah, no doubt. What about the cattle market? There we did make some new highs for the move as well. We've had a lot of good tailwinds here. Cash trades in 192 yesterday. Boxes have been higher.
Yep.
Do you think we'll go back and retest the old contract highs?
I actually do. I think we need to get through the USDA cattle on feed report on Friday. And, we need to see the reaction to that report. The marketplace is oftentimes gives us bullish responses prior to a bullish report, and then sometimes reacts bearishly to the bullish news. So if we don't get something bearish out of that cattle on feed report and the market's able to hold with a stronger cash trade next week, then I think you can go back and test contract highs, maybe even make some new ones.
Yeah, and boxes have been screaming higher here, so it sounds like the packers may be making a little bit better profits, or maybe some profit anyways, so that should be helpful. Yeah. Meanwhile, you've got hogs going the opposite direction, new lows for the move here. Do you think we continue to see pressure in that market, and is that still just the futures premium, or what's going on? Why are we seeing this pressure?
Well, the big thing is that the futures price had priced in some strong advances in cash hogs, and while cash has been moving higher, it's been moving higher rather slowly, and has paused on a few different times over the course of this higher summer typical cash rally. And what's been happening is we've just left the futures higher than what cash markets are willing to provide it, and so we've had to swing back the futures prices back in the other direction. I mean, there are a few other things. Our export pace into China with hogs has been slow as their supplies continue to rebound, and maybe not as much domestic demand as we would have hoped for at this point in the season.
And technically, we did finally take out that 200-day moving average here this morning, which isn't good, right?
Yeah, and of course, the funds had built a fairly sizable long position, and now they're in the process of liquidating that. And it certainly appears that they're not done with that liquidation phase yet. So, with the trade underneath the 200-day, you definitely are going to trigger some more spec selling.
All right. Thanks so much for joining us. Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.